Hello guys, today I want us to talk about the levels of discount and premium, the Forex market. We know that most of the time the market has two levels. If the price, example, if the price is bullish, if the price is pushing to the upside, right? We always know that it will retrace to a certain level. For example, let's say that this one is a main low. I'll plot a line there. I'll plot another line up there. Okay. So you're going to realize that most of the time when the price reaches that level, try to go back to the middle of the range, the high and the low, up there and below. Price tries to go back to 50% of the level, which we call equilibrium. And equilibrium is the center of the overall move. For example, if we measure this area, we measure this range. Let me use this. I'm used to my tools being here. Let's measure this low and this high, right? We can see this upper face, can call this level a premium level, right? Then the lowest level is called a discount level. Discount level, so let's use a different color there to make it look different. So you're going to notice that this is how the market moves. Once it goes above a level of a premium, it will try to sell into discount for it to continue pushing to the upside. So the moment you understand these levels in the Forex market, things become a little bit easier. And I'll give you an example, a good example. First of all, let me just clear this chart and give you one more example. Is that once price goes higher, retrace back to a level of mostly discount or below just equilibrium with the one pip, then you'll see to go up again, break the structure, this become a new range. All right, you'll see it again to trace back to a certain range there and extend higher. Unless it wants to collect this liquidity, it can go lower there, sweep liquidity, and proceed to the upside. The moment it sweep liquidity, what's your range? This is your main low, this is your main high. Low, high, you realize that it goes back to a level of discount after taking out liquidity and expect a continuation to the upside. I'll use this pair here, AUD JPY, there's a pair here. And this pair, when you look at it, how it has been moving, right? For you to use this, because I'm sure most of the time you say they're going to use the gun box. The gun box is this tool I'm using whereby it divides above the half part of the range. If this is my range, you can see I have a 50% level. So that is my gun box, or if you use the Fibonacci, then things are a little bit different with the Fib, but still the same. Okay, so you realize that in the market, you need to look for impulsive move. Impulsive move is where the range that the market creates a bigger move, then a correction, bigger move, correction, bigger move. So for you to be able to use these levels, you want to always put your level at the lowest point, the low there, and go to the swing. You realize that the market will try to retrace back to at least a level of equilibrium, which is the center, then extend it to the upside. For you to place that fib or the fib or whatever the tool you're going to use, you need at least 4 candles, 3 candles. Remember, we talked about the swing. I said for you to identify a swing high, a level that creates the biggest a level where you can measure, you need to see the middle candle like that one being longer. The one on the left is shorter. Then this one is also short. So the fourth candle, you can see it goes down. So this tells you that this one is a complete swing. When you look here, we can see the middle candle here, which is a red candle, seems to be the one that is long there. But this one, they look a little bit equal, but you'll go the red candle as the middle, the green short. The fourth candle, you can see if you look at this, the first candle, the middle candle, second, the third, the fourth candle, price goes there. So this means that when you're measuring your swing, you're doing this. Let's do it there, that. Let me just do this and we'll get to see it here, that. Okay. So this is your complete, that's your swing high, this is your swing low. because you're looking at a level that is exactly as it's supposed to be. So let's look at this pair. We're going to realize that once the pair, for example, just to give you random measurements before I use my, how do you call it? Before I use my fib or whatever the other tools I'm going to explain, we're going to see that this price is bearish now. Once the market is bearish, it's going to try to do what? To always hold itself to a 50% level. And this one does not just, it applies everywhere, but at least you need to have a bigger direction, a big expectation of where the market will go next. So this being a monthly time frame, I'll just come here, right? Because if the price is bullish to the upside, what is your swing low and the swing high? For example, we study this price here. Look at this, the low here. That is the high, all right? The red candle there in the middle is longer, right? The red candle is longer, the red left shorter, the green shorter, a complete swing. It created that move to the upside. Let's say there things almost look equal. Let's go with the green candle in the middle as the main one, the red on the left, the red on the right, and the price went low. So if you are measuring your of discount and premium, if you're using a tool like a gun box, you're putting it down here, right? Targeting that high, right? Because so you say that here the price, once you see the price dropping, you can say that, okay, this price maybe is dropping to a discount level. You can see it was going up to the upside. Once it taps to a premium, started dropping to a discount level again. This is the discount. Coming to discount again, you'll see it trying to do what? To go again to the premium, because on discount, the price is too cheap and the market can easily buy to the upside. And that's why the discount levels are always good for buyers. They benefit a lot because they buy at a cheaper price. Now, another example I'm going to show you is this. This is just example I'm pulling out. For example, you can see here, this is a low. Where is the next swing? There. This is the level we're targeting because the price came back to a discount according to this. Price went back to a premium. You see, the moment just price steps in premium start behaving like this, it goes back to a discount and it shoots higher. Around that level, it never went for that high. Just around that level, according to the swing, we have candle longer, shorter. This one is shorter. Price drops again to a level of discount. You see on discount level. Again, what happens? Price goes higher. Now, when you look on this swing level here, you can see you have a lot of swings here. You zoom in a little bit, you're going to see that you have this middle candle longer, a swing low. They have like a swing high, but this one, yeah, this one is it's not a complete swing high. Yeah, it's a swing high because we have 4 candles, middle red, left green, right red, then the green one, but price extended to the upside. What does it mean? We are using the gun box or whatever the tool we put it here. There's a complete swing. If the price does not come to a discount, there's no buy, right? The next one, you can see the next one is here. And we'll do this. What are we seeing here? You can see in this range, this is a swing low, swing high. Price went back to a premium level, a discount level, and then went to the upside. So you can see the price will try to retrace back. It went high, retraced back, expanded to the upside. The next level here is this swing low. We go to the one swing high there, up there, right? Swing low, price went high, comes back to discount, because the lower side is a discount and the price expanded to the upside. Now, on this particular area, we can have the next swing, this pair. There's the highest point. The lowest point is here. What are we seeing here? What we're studying here, we can see price expanded to the upside, that the complete high there, and retraced back to a level of discount and tapped to a bullish order block there. And price now is being on discount. Now you can look for a buy into this pair. And I'm going to help you. So the upper part of the price is called a premium. The lower part is called a discount. So let's even analyze this pair. For example, when we look at that pair, we can see this is your bullish order block there. Price tapped into it. This is a monthly time frame. I can open the weekly. All right, I know the price is on discount. You can see when I open the weekly time frame, I can try to refine in a bullish order block. For example, we have this one there. So what does it shows you? For example, even if I'm marking this low, yeah, and I mark the high there, it still shows me that the price is on discount according to the weekly time frame, and there's a higher probability of I looking for a buy to the upside, and this level can target that level as a liquidity exit. So where the price is right now, tap into a bullish order block there. This is a swing low, a swing high, price retrace back to a level of discount where there's a bullish order block, and it can now go back to a premium level. So let's have this. This is a weekly time frame. This is just a picture to show that you have a higher probability of buying to the upside because the price is on premium, on discount, I mean. Let's open the daily time frame. When you open the daily time frame, you can see now this where the price is. You're looking at that high as a level of exit, right? Look at that level as a level of exit because you're looking at that level as a liquidity according to the way I've been teaching you guys. So this means that just between what we have here, this data, you can completely see this is a swing low and that is a swing high. If we measure that swing alone from the high to the lowest point, what does it tell you? What you're learning here is the price is on discount, and the simplest way to do this so that you don't forget, allow me to plot just a line here, a straight line there, up there, right? And below, I'll just pull back this tool here because you know that we are on discount, so I can put my another horizontal line there, and I'm going to look for a 50% distance of this range, discount there. We plot another line there in the middle, and I'm going to explain why I have that line there. Okay. So what are we learning from this? We're learning that this lower side of this market, according to the daily time frame, this one is a discount level, and up there is what? Up there it is a premium. So the price has a higher probability to continue buying, but once we cross that line, we might start seeing retracements there. But remember, this happens to all time frames. This is the picture we're seeing on a daily time frame, all right? But if I switch myself to a 4 hours, let's go back to a 4 hours, and measure my range. You can see at my 4 hours, my levels are still there. But this doesn't mean that I cannot position myself well. I cannot wait. According to the daily, that's a level of equilibrium. But according to where the price is, according to the 4 hours, if I have just to take my rough tool there, put it the lowest point there, and go where the price is, you can see here, it tells me that the price is on premium. So what do I do? The easiest way to do things is to look at that level. We remember, I want you to follow. Remember, among this range, from that high to the lowest point, like that, this is a range itself. This is a 50% of that level. Below is what? The discount. Above there is a premium. Now, on this discount, because we are below the lower time frame, this measurement is coming from the daily range. For 4 hours time frame, you can see the price is still on discount. And this discount, this daily discount, you can also divide it for us to see a best another level. For example, I'll plot another line there. Okay. Allow me to remove this tool. And this line, allow me this one, I'll give it, just give it red there. So that this one, look where the price is, we have a different color. So you can see once we have this, what does it tell you? Between this range, from this high, right, to this low, this what is a discount, right? From this low, from this high, that level, that's a premium. So what does it tell you? Right now, from the data we have, we can actually say the price it has a higher probability because it's on discount according to the range from this low to that high. This video you'll have to rewatch it again for you to follow. Now, the price on premium, according to where the price is, and we have a higher probability of price trying to go back to a discount, trying to sell back to this low, around this zone, a discount. Around discount, it can react to anything, a bullish order block or a fair value gap and go higher. So here we have a higher probability of price selling off because from the range itself, the price is on premium according to the 4 hours. But according to the daily and higher time frame, we're on discount. But the price does not just buy. The price will keep doing the same thing, discount premium as it moves. So the price being here on premium, I can anticipate a higher probability of this price again trying to sell back to a discount before we go higher. For example, if I have to plot the Fibonacci here, you'll see where it's going to put me. I'll put my Fib down there to the highest point. You can see according to the Fib, if I measure from where the price is exactly, it's showing me that this is a 50% level. You see the red line there, showing me that the price is on premium and the price, it has a higher level to sell back into which a level of discount before we could see expansion in the price. So that does it tells you? It tells you that long term in this Audi JPY, we know that we're supposed to buy to the upside to the highest point up there. But we cannot just buy direct because the market's not gonna just do that. The market has to build the liquidity like that. Take our liquidity like that as it goes. So that's why there's discount and premium levels. So where the price is right now, I can now say, I'm going to check on what the JPY is doing. Because if I'm looking forward to see the Audi JPY sell back to my discount level, then I want to see the JPY index also. If I'm looking for the, Audi JPY to go to a discount, then I need to see the opposite on the JPY index to see it goes to a premium. So allow me to go there on the JPY index and see what is happening there. It's a minute. Let's see what do we have here. JPY index. Okay. Already did some analysis there. So okay, we are here. According to our JPY, if I go to a daily time frame, allow me to go there so that you get the real picture. According to the daily, if I remove this line, right, that's the middle line, I can give it a black color and explain. Between this swing high and the swing low, this is a half distance. What does it tell me? It tells me that as long as I want to see the JPY, I know that according to the analysis we did, we know that the JPY is very bearish. But where it is right now, it's on discount, all right? It needs to go back to a premium before it sells off. It needs to go back to a premium, expand higher to that level. The upper side is a premium, the lower side is a discount. I want to see it go back to that level of discount before it sells off, right? So from what I'm saying is this, because I know some members here, things are not clean with you. So allow me just to analyze this pair quickly, so that when I say why am I expecting to see it drop, you'll easily understand. You can see the JPY index has been pushing low. This is my bearish order block there, right? Acting as a resistant. So where the price is there, what am I looking at? I know that the JPY index, the price is what? It's bearish. It's supposed to be going down. From the range that if you have to measure the swing high, there's the swing high. You can see the swing low. What are you seeing there? You can see from a bigger time frame. I'm not going to plot those lines there on a monthly time frame because of things might not be clear enough. What are we seeing here? Price went low. Price is selling off, but you can see when it's on discount, try to buy back into premium. Since it's on premium and you have a resistance zone there, we expect the price to again sell off, to go down, but it has to sell from a premium level. So that one, I hope that one is clear. We remove this one. We go to weekly time frame. On the weekly time frame, there's no difference. On the weekly time frame, we can only see, we know that this is our level of discount, level of what? Resistance. Allow me just to fade it out to the background like that so that it does not appear sharp. Then we can analyze, we know that the price is always about liquidity. So that level is a liquidity pool. That area being swept there, what do we have? Okay, that area being swept there. So you can see the area has been swept. So we know that this one is a sell, and we're looking for it to see the JPY index goes down to the downside, and we're looking at this low as an overall level of liquidity. Okay, level of liquidity down there. So I can go to a daily time frame and look for a range. On the daily time frame, this is my range, a complete swing on daily time frame. So I can plot my first line above there, right there. Give it a red color. Allow me to delete those other analysis that I did because you already know what you're looking at, right? And look at this swing low here, right? So what I can do is that I'm going to look for 50% of that distance because I know that the price is supposed to go down, but it's supposed to go down from a level of premium. So this one can give it a blue color and you can remove that tool. What are we learning from this? What we are learning from here is that price is on discount and it needs to go to a premium. And I've told you on the other side of Audi JPY, I've told you that the price is on premium and it's supposed to go back to a discount. So when it goes down, then I expect this JPY index to be going to premium so that when it sells back, I'll be buying the Audi JPY. So from a bigger time frame, this is a daily time frame. Let's go to a 4 hours time frame list and see where the price is. On the 4 hours time frame, this is where the price is. You see, on the 4 hours time frame, I can still again, I know that the price is on discount, but on the 4 hours, when I go to 4 hours time frame and I look at this one as a range, all of it, the low and the high, I can again find 50% of this level, like that, okay? And do this, put my vertical line there. This one up there, I'll change it into red so that I don't lose the context of what I'm trying to say. What am I learning from this? I'm learning that this price, if we look at this as the overall range, we can see that the price, price was on discount, went to a premium, came back to discount again, went to a premium, and you might see it come back where? To a discount before it could go higher. So this price, you might see it do this, something like this, a little bit to a discount, go higher. In fact, I just want you to see, even I don't have to go far. Look at what the market has done. Red candles, you see, once it stepped into a discount, you can see the green candle coming in. Price can only buy when it's on discount. It cannot buy on premium. Most of the time, it's going to struggle a lot. So now look at this. I know that this price gonna do this, it has stepped into a discount. So I expect it to, it has come back to a discount. I expect it to go now to the premium level like that. When I'm looking at it to go to the premium, because it's on discount and this one is the equilibrium there, to go higher. Once it's going higher, then I'm going to sell Audi JPY. Let's go back to Audi JPY. Audi JPY, I've tried to explain to you that one. Yeah, I've said, according to Audi JPY, the pair, it's not on premium. Look at that. I've told you that this is the premium. This is the discount, right? And this premium you are seeing here, I can still also divide it into like that and plot another line in the middle. That this one, I can give it a black color like that. What does it tell you? If you see to this price here, it tells you that this price, it's not on premium and this is a discount. So I have a higher chance of selling this pair to this level than trying to buy to the upside. So I hope you understand that every range, you can always divide it into premium and discount, but you have to keep in mind knowing where the price will go. You can see here, price goes back to a premium, comes back to a discount, and then a sharp move to the upside. Taps to a premium, it does not stay there because there's sweep liquidity on the left, goes back to a discount. Again, you see from discount, a sharp move to the upside. Now it is there. What is it trying to do? To go back to a discount. That's why I've said that I can try to go for short positions on ODJPY pairs. Excuse me. to Audi JPY pairs because all of them they are on premium according to what I'm seeing. So I can have some short-term sell up to this is my main discount level. You see, this is my main discount. If you remember what I've shown you when I was starting, I showed you that this was my discount, that was the premium. This premium, I've just divided it into two, but if I remove it like this, you're going to notice that that's the premium zone. So I can look for short position up to a discount. Then when I tap on discount here, I can now look for long position. The same way, these are the pairs we did analyze here with the whole team, and we are waiting for those analysis to happen. USD JPY is here. Let me show you. You can see, what are we waiting? Why are we waiting to buy here? Because if we measure the low of this range here and up there, this, you can see this is your discount level. But according this measurement, I used the Fibonacci, the fib from this low to the highest point. And you can see this is the most sensitive part in this Fibonacci, very, very sensitive level. This is where it has a high probability of buying there. That's why I've seen, if you follow what we've done on the JPY index, you can see that JPY index needs to go where? Needs to go up, right? To go to a premium. And the way to go to the premium, definitely this DJP is going to keep pushing lower. Once it ups to this level of discount, you can look for long position there. So a member asked me the setting of this fib. Let me display it there. Those are the only setting I have. You can copy them on your fib and you're going to switch anything else off. Just have this one there. If I scroll a little bit down, you'll see you don't have anything else there. You don't have anything else there. Don't have anything else there. So yes, so this is a fib, and you can see I'm waiting to buy long term because I want to buy long term USD but I want to buy on discount. That's why this week we don't have a setup. Euro JPY the same there. You see, what are we waiting? We're waiting to buy on discount. Pair is on premium. That's why we need to buy on discount, and this is just liquidity there, right? Another pair is a Euro JPY. Audi JPY, I think that one is clear. We have done it with you. The next one here is JPY, sorry. We are waiting to buy down there because the price is in on premium. See, premium. So you can't buy there, but you can. That's why I'll personally look for short position until you go back to level of discount, then you can go long there. So this week you might have some short position. The next week, get into a long position, right? So guys, thank you for following this information. Make sure that you watch the video, and otherwise I'll see you on the next video. Thank you so much.